Welcome back to Midcap Radar. Well, Indigrid recently announced that it has partnered with IFC to develop a battery energy storage system project in Gujarat. Shah, who's the managing director at Indigrid, joins us now to discuss more. Thank you so much, Shah, for joining us. First up, give us the contours of this particular development. So who are you partnering with in this particular project? Is it under the Indigrid platform that you had earlier announced with BII? Has the PPA already been announced, and what is the capex commitment from your end?
Thank you for having us. This project is, first of all, it's a BESS, so Battery Energy Storage Purchase Agreement, which is already signed with GUVNL. This was one of the first large utility scale project. Yes, this project is going to be under Indigrid, where on equity side, we are partnering with BII and Norfund. And on debt side, IFC, who has been a long-standing partner on the lending side, is also participating. And then they have done a phenomenal structure for us in terms of debt for this project specifically.
Okay. So Harsh, give us some details then. What is the quantum of commitment? Does it come under the BI-backed Indigrid platform? And is the PPA signed for this one? What would the tariff be?
Yeah. So the agreements are already signed for this. This total commitment is around 460 odd crores of debt facility that IFC have signed, which is around $55 million. IFC with this deal overall lent approximately $380 million to Indigrid, which is about 3,250 crore, which is one of the largest lender on our books, and also one of the longest debt financier for us. We have up to 17 years of fixed rate loans with IFC or bonds with IFC. And this is incremental such facility, which is concessional in nature to support the project. And that's the tariff for this case is not finalized in terms of rupees per unit, but in terms of rupees, the lakhs per rupees per month megawatt.
That's right, yeah.
So this project was won a year and a half earlier. So this was won at approximately 4,50,000 rupees per megawatt hour per month. That's the tariff for this project.
4,50,000 rupees per megawatt per month, which is the tariff that you have mentioned. Okay, this largely compares in line with recent BESS projects. One worry, what's actually happened is that in the last 6 months, we've seen one project from JSW Energy, which was at a slightly higher tariff, actually getting not getting the nod from CRC. Any risk to that, given the fact that you just mentioned that this is a project where tariffs were determined some time ago? So that is the first question. The second question is something slightly more structural. Why are you finding the need, or what is the need, which we asked you last time as well, the need to deviate from transmission assets and getting into slightly more capex intensive BESS projects? Will this dilute shareholder returns?
So to answer your first question,
right.
The BESS is signed for this. GRC has already approved this. In comparison to the JSW project you were referring was approximately, if I'm not wrong, around 10 lakh rupees per megawatt hour per month.
Right.
Versus this one is less than half. There's also a long time gap between the two, so they're not strictly comparable. But in our case, the GRC has already approved the tariff. The project is started, and we are looking to commission in this financial year as well. So it's pretty advanced stage, so we do not see that a regulatory risk on this project itself. To answer your second question on why Indigrid is doing this, for us, and Indigrid is a critical player in energy transition. We think battery energy storage is a crucial requirement for energy transition for India, and it offers a phenomenal opportunities for players like us to build scale early on. And this is one such project where we are showcasing that. The contractual structure of these projects is similar to transmission in terms of take-or-pay, as long as we maintain the availability, which is pretty much similar. So for us, battery energy storage projects are like transmission, or I would say they are transmission projects. Even Ministry of Power, when they have announced the classification of battery energy storage projects, they have clearly identified the utility scale projects which are attached to transmission systems are part of transmission system. So for us, this is just an extension of transmission system, nothing beyond that. In terms of shareholder returns, this is hugely accretive to shareholders because the project was won at a good economics, and we are very well in time to commission these projects. And during the time of the project, we have seen the battery energy prices, battery energy storage price is reduced a bit, which has added the returns for this project.
Okay. Harsh, then tell us about any fundraise plans to expand the AUM going forward in terms of the assets that you want to add in FY26. What is on your radar? You say this one is just an extension of the transmission biz itself. Are there any more such plans that you have on the horizon?
Certainly. We see our business in three buckets. First is transmission, where we are doing development as well as acquisition. Development happens in Indigrid platform, where we are targeting over 50,000 crores of projects this year. Wins is not in our control, but we will be looking to bid for these projects. On the acquisition side, we already acquired one project, which is solar plus transmission from Renew, which put together approximately 2,100 crores of enterprise value this year itself. We just closed it earlier this month. And the third is battery energy storage, where we already have around 900 megawatt hours of projects, and we are looking to expand and bid for more projects. So in all, we are seeing growth in all these three segments. We will look to do both greenfield and brownfield acquisitions in these three segments in this year.
Harsh, very quickly, so are you sticking to the dividend per unit guidance of 16 per unit for FY26? Any upside risk there?
No, I mean, the upside risk, I think is not there. I mean, upside, we have already factored in earlier this year, the 16 rupees a unit guidance, which itself is a almost 9% jump versus last year. We are confident of delivering that. In any case, we only increase DPU when we are very sure of delivering the DPU for next 5 to 7 years, irrespective of new projects coming in or acquiring new projects. So it's a fairly stable prediction that we have done for DPU. On top of it, we are looking at interest rate reduction that is coming in this year. And hopefully with more refinancing coming in, we'll be very, very comfortable delivering our 16 rupees a unit guidance for this year.
Okay. All right, Harsh. Thank you so much for joining in with all those details. With that, we'll slip into a break. With that, here's some good news for our viewers. India's business news leader is now click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.